Hi, Mark Gordon with GoldenTicker.com on Wednesday, September 28th, 2011. And we're looking here at the general markets. This is the NASDAQ 100, the QQQ. And I drew along the tops here, and that's been in place for well over a month, and almost 2 months. This is an upward trending line here. Now, you can draw an imaginary line down along the bottoms, and you can see what's called a channel forming. It's an upward sloping channel, but it's very volatile. From the top to the bottom, it's about a 10% move. So that's a lot. And so we have a very wild, loose market here. We rallied up earlier in the week. Looked like we were going to take out all these moving averages here to the upside. Yesterday we got actually above the 200-day moving average, this black dotted line. And then today we dropped about 1.5% back below all these key moving averages. This blue solid line is the 50-day moving average, so back below that. Will we go back down and test the lower end of this channel at about $53.50? I would not be surprised. We're now looking at the S&P 500. This is the spiders, down 2% today. And this is a much uglier chart. These are the bigger cap stocks. The NASDAQ 100 has a lot of tech stocks in it, so tech looking a lot stronger than just the general large cap stocks. And you can see this volatile channel here as well, but it's not upsloping. It's pretty much of a flat channel, just grinding up and down here, caught in a trading range for 2 months now, and down over 2% today. Never got above the 50-day moving average here on the S&P 500, and well below these other key moving averages. So this is a much uglier chart. And here is the Russell 2000, down almost 4% today. So very volatile on this index. And you can see if you draw a line along the tops here, we've got a down-sloping channel here. And well below the 50-day moving average, well below all key moving averages. So the small caps looking very weak as well. So they're not ready to lead anytime soon. And in case you were looking for leadership to come out of the emerging markets, not yet. Down 3% today, well below all the key moving averages, and even well below this red line, which is a 21-day moving average. So this one not looking good at all. Emerging markets not going to lead anytime soon. And here is the XLF. This is the financial sector, which has been under pressure for most of the year here. Under extreme pressure here, another ugly chart pattern, well below all key moving averages, losing almost 3% today. Looks like it may be headed down to test these lows here at $11.34. So financial is not looking to lead anytime soon either. And now looking at the mega cap, the Dow Industrial Average, down 1.6% today. Ugly chart, down below all key moving averages, waffling in a trading range here, up and down, back and forth, whipping everybody around here. Same story. So money not flowing into the mega cap multinational companies as well. And looking now at commodities, this is the GSG, which tracks the commodity index fund, and it was down 2.5% today. Ugly chart pattern, below all key moving averages, down sloping, making lower lows and lower highs in a major downtrend. So commodities not offering any hope either. Looking now at the gold miners, the gold mining stocks had a good run going here throughout the summer. Nice uptrend going, and then of course in the last I don't know, 6 or 7 trading sessions, fallen off a cliff here. Big gap down here last week, of course. Huge volume, huge downside volume. Back down here testing lows. So severely damaged charts here in the gold miners. And looking at the gold today, down 2.5%. Ugly chart. Had a good rally going since July here. Breakout, ran new highs here, and corrected back, and then last week fell off a cliff, taking out all key moving averages. Another bad down day today. The only saving grace is the volume was light today. Looks like we're consolidating around this 100-day moving average at about the $1,600 level. We did have a very ugly day on Monday. Came down here to 1535, and testing the breakout here. So looks like gold is trying to make a bottom here. We'll have to see. I really would not trade gold to the long side until we start to see a real trend develop. Right now, all the trend lines are pointing down, so I would just wait till this thing stabilizes. If it does, it could continue lower. There's no rules. Silver looking real ugly as well, down over 6% today. Very nasty day for silver on Monday, coming all the way down to $26. Silver, of course, made a high almost touching $50 here back in May. Had a big correction. Looked like it was forming a nice cup. Got a nice uptrend going here, and then all of a sudden, a couple of weeks ago, we broke that uptrend. Fought a battle here at the 50-day moving average, lost that battle, and has since taken out all key moving averages. No real support for silver, just the round number of $26, the bottom that we made on Monday. So hopefully silver will consolidate. Looks like it's trying to consolidate here in the $30 to $32 area. We'll have to see. Again, very difficult to trade this type of a chart. There's no real trend in place. And one last chart I wanted to show you is the VIX. This is the volatility index, and the bigger the number, the more volatile the markets are. Now you can see that we've spiked up quite a bit, and this is a monthly chart here. And you can see that we had a lot of volatility in 2010, early 2010, and of course extreme volatility in late 2008 when we had that horrible bear market plunge. So we're back here testing the old 2-year highs here of the volatility. Will it spike up again to almost 90? I don't know. But this is, of course, 2008 was a very nasty period there. But it just begs the question, what do we do? You know, there's really, to the long side, there's really not much to trade. The general stock market, the charts look very, very poor there. The precious metals have been damaged heavily. Their charts are not tradable, in my opinion, until they get into some sort of a trend. Commodities are trending lower. International markets trending lower. There's really not much to do, in my opinion, other than wait this thing out and let's see where we end up if we get a trend going. Okay?